Charles Island, CEO of East African Breweries. Pleasure to be speaking to you after such strong results.
Thank you. Great to meet you again.
Thank you. Charles, talk us through the results.
Yeah, look, thank you. Yeah, we're really pleased with them. Yeah, they're solid at the top line. They're really good at the bottom line. They're a testament to the work that we've been doing over the last couple of years to strengthen all of the aspects of the business. If I think about our performance ambition is to be the best performing, most trusted and respected consumer goods company in Africa. I think we're getting there. I don't think we're there yet. I think we've got more to do, but we're getting there. And the reason we're getting there is because we're really clear about our strategy. We've got 6 key areas of strategic thrust, and we've been working really hard on those. If I look at our performance through a market lens, we've grown revenues in each of our markets when we're looking at it in local currency. So Kenya, 61% of our revenue grew by 3%, actually 6% if you strip out the Senator effect. Uganda, 18% of our revenue grew by 7%. Tanzania, 11% of our revenue grew by 2%. And EABL, our smaller markets, 10% of our revenue now grew by 48%.
It's 10% of your revenue.
Yeah.
And really, just so people understand, those are the more esoteric markets.
Yeah, that's South Sudan, Rwanda, Burundi, Eastern DRC, and our duty-free business across the region.
And that's growing at that kind of pace.
It's growing at that kind of pace. I think it'll be our 3rd largest market coming up this year. So across the market, it's really good. And when we add all of that together, Ali Khan, 6% revenue growth, 6% gross profit growth, 16% underlying profit growth, and because we've had a couple of exceptional kind of one-offs.
That was in the previous.
Yeah, so 40% profit after tax growth as a result of lower interest charge, lower tax charge, non-repeat of a big one-off that we had as a restructuring cost. We're getting the benefit now. So good results overall. I'm pleased with them. We're not done. There's more to go. We're going to be working hard to strengthen our portfolio. We've got work to do on mainstream beer. We've got work to do on emerging sector beer. But from a product portfolio perspective, I'm reasonably pleased with the shape that's emerging for us.
Can I dive into the product portfolio? It's Guinness plus 17%. That was a big
number. Premium beers overall plus 17%, including Guinness. And
what else is premium besides Guinness?
We classify Tusker Light as premium beer. We classify Tusker Malt as premium beer. We classify Serengeti Platinum as premium beer. So it includes Guinness, and most of it is Guinness.
Is this the premiumization story?
Yeah, I think it is. I think what we're able to see is consumers trading up into better quality, better drinks, and they're trading up into premium beer. They're trading up into RTDs. RTDs extraordinary this year. 70% up.
Wow.
Yeah.
And what are the RTDs? Are like Smirnoff Ice?
Yes, stuff that you would have drunk 20 years ago. Yes. So Smirnoff Ice, Smirnoff Guarana, Snap, products in that.
And you've been innovating in that space.
Yeah, we've had a really strong innovation program over the last 2 years. If you remember, back in F14, we brought quite a few new launches to market. F15 is about making those launches work. So we didn't bring too much to the market in terms of brand new stuff, but we made the stuff that we'd launched really work for us. In F16, we're going into another innovation launch phase. So you'll see quite an aggressive launch pattern from us over the next 12 months.
Mainstream beer, that's the Tusker flagship, down 2%. Any explanation?
Yeah, part of it is about trading out. So it's about people purchasing Guinness more often than they would have done before. And when they're drinking a Guinness, they're by default.
And you prefer them.
They're not drinking a Tusker. I prefer that we walk and chew gum.
Yes.
I prefer that we grow our premium beers by something approaching 20% and our mainstream beers by something in the single digits. I think that we can achieve both, and my drive to the commercial teams in each of the markets this year is really get your mainstream beers humming. That's one of my priority areas. And we've got some new activity coming up on Tusker, we've got new activity coming up on Bell, got new activity coming up on Serengeti, and I'm really hopeful that if we get the opportunity to sit down again in a year's time, that you'll be saying, Mainstream Beers, what have you done? It's fantastic.
Can I drop to spirits? Because
yeah.
you know, in many ways, EABL in East Africa is known as a beer company because Tusker is such a flagship product. Yeah. But you've got some very eye-popping numbers here, if I can just go through them.
Yeah.
Reserve spirits up 71%.
Yeah.
I mean, I remember 2-3 years ago, triple-digit gains, but it was off a very, very small base. I suspect we're now off a bigger base, aren't we?
Yeah, it's becoming more meaningful for us, and I'm interested on a month-by-month basis of the performance of Reserve now, whereas before I'd only look at it a quarterly or a half-yearly basis. And we've got a great team working here in Kenya, led by a guy called Andrew Kalonzo, who's doing great work. And similarly, we've got dedicated teams in Tanzania and in Uganda. And we've seen the market respond really well, because when you've got GDP growth across the patch like we've got here, we've got new emerging middle class and new wealthy people who might buy a Jaguar one day and a King George V or a Blue Label another day. And we appreciate the fact that there are people who are demanding that kind of very high kind of premium segment, and we're offering it. And
do we have environments in where people are drinking this, or is it a home?
Yeah,
how is it?
It's a very astute question, actually, because I think that our market growth would be accelerated if there were more premium type outlets.
That's what I think.
So I think in 5-star hotels there are bars. I think that there are various membership clubs, both in golf and outside of golf, which provide an on-trade drinking environment for brands in that sector. However, if people want to kind of really kick back and kind of enjoy those sorts of brands, at the moment they're primarily doing it at home. So quite a lot of the work that we're doing is on gifting, corporate gifting, at Christmas and other times of the year when successful business people, leaders in the various countries are thinking about saying thank you to their friends for the friendship and for their business partners for their partnership.
I know what reserve spirits are.
Yeah.
Premium spirits are.
Yeah, so it's Johnny Walker Black Label, it's Gordon's, it's Tanqueray, it's kind of Smirnoff is in there. It's our kind of international premium spirits that you would find.
That's up 31%.
31%, and that's off a much bigger base,
yes.
Right? So, kind of significant revenue growth from that segment for us for this year. And again, testament to the emerging middle class, to the new wealthy, and that is much more about on-trade drinking. That's about, the modern retail experience, modern bars that people drink in and socialise in. It's about golf clubs. We're getting really good traction in golf clubs.
Is that
now.
right?
Oh yeah. Well, you think about the demographics of a golfer,
yes.
Right? And golfers are generally very, very social. After the game, they like to drink with the people that they've played with and the broader group. And
yes.
We're getting good traction in that space. I'm delighted with getting over 30% growth with that segment. I think there's more to come. So, Johnny Walker is such a fantastic brand.
That's a huge label.
And we've got some new advertising breaking on Johnny Walker coming out. It'll blow your socks off when you see it. And I think that one area that we've had a little bit less competitive intensity is in that area. And there are some other brands, which I'm not going to mention, from competitor stables, where I'm saying to my guys, listen, these guys are leading and we're the leader in East Africa. Let's lead.
So you're looking to leapfrog that, are you?
Yeah, looking to make sure that we're serving our shareholders by developing that segment as rapidly and appropriately as the market will take.
Looking at emerging as well, that was up. That's at the lower end of the.
So that
price point, right?
That's what we call the emerging segment. So that's in the segment where consumers, if they weren't choosing those brands, they would be choosing brands in the illicit area instead. So what we're trying to do is we're trying to give consumers a choice, and that is to come out of the illicit sector, to come out of a sector where the product quality might be variable, or that it might be kind of harmful for health. You're taking a risk by drinking something, into something that's quality assured, albeit tax paid and therefore at a higher price. And I think that EABL, along with other producers in the marketplace, have got a role to play to help migrate Kenyans out of, and East Africans out of the illicit informal sector and into the formal sector.
It's been a big issue, Charles, in the last few weeks, enormous. And there's been some pretty dramatic footage coming out. Can you tell us what's been happening? You know, the president, I know, came out, and then there was this big move to sort of, and I think quite a bit of collateral damage, I'm not sure.
Look, we're tremendously supportive of the intent. I think that it's long overdue, and if anything, a bit late. And I think the president's rallying call was intended to create a momentum for change, and it certainly did that. I think that the impact, though, included some collateral damage. So producers like ours who have got properly registered brands which are quality assured, where we pay all of our duties and taxes, were caught by people taking up the call, and it caused some business disruption. So we saw some MPs and some governors kind of leading groups of people to try and kind of address the challenge. But they included our brands in some instances into that, and that wasn't right.
Do you feel you've got a firewall now? People understand?
Yes, I do. I think that it's nature of the environment that things kind of flare up, and there's a period where of significant kind of turbulence, and then it settles down. And we had worked really hard to make sure that we were kind of pulled out of being collateral damage in that. The team worked brilliantly. We actually withdrew ourselves from the market for a while.
Oh,
so
did you?
We stopped supply because we couldn't guarantee the safety of our people or our distributors, and it was the right thing to do. So we withdrew for a while. We let things kind of calm down a little bit. We made sure that all of our registrations and permissions were in place. The team did great work doing that. We've now got, we had all of those. We've now got kind of evidence that we've got all of those, and things are normalising. And I think over the medium term, it'll be good for our business, because that unfair competition which comes from illicit manufacturers and manufacturers who don't pay their taxes is being removed from the market.
Now, can I extend that, because there's been a lot of discussion, particularly on social media. One of your competitors in Naivasha has been complaining, saying that, I think the description that was used is when an elephant has put its foot on your tail, it's not fair, implying that you were putting pressure on them. What is the story there?
I don't think there is a story, really. I think that it was Rudyard Kipling who said, if you can keep your head when those about you are losing theirs and blaming it on you, right? So I don't think there's a story, really. I think that the manufacturers in our sectors need to pay all of their duties and taxes, and if they don't, then the KRA and others will come down hard on them. We pay all of our duties and taxes.
Quite hefty ones.
Quite hefty ones, and in many ways we're very pleased to do it. I think that over the last couple of years, our business has suffered quite a lot of disruption with the excise tax on Senator, for instance. And
which has now been reversed.
Which has now been largely reversed, But when something happens to affect our business negatively, we kind of get on with it.
Yes, that's a good way of putting it. Can I just talk about a bit of the region? You've got lots of other products in Uganda, I think. Bell. There's an innovation here, Waragi Sachet. What's happening?
I think from a broad perspective across the region and across our business, I think about our 6 priority areas as being the main drivers of our business activities and our future and current business performance. I think about Uganda, Tanzania and our EABL markets as being broadly very similar to the agenda that we've got in Kenya. However, with different emphasis based on the market development and where we actually are. From a kind of priority perspective, I kind of think about 3 main priorities going forward. I think one of them is absolutely about getting the route to consumer, the route to market to be robust and appropriate for our business needs. There's quite a big upgrade going on across the region of our distributor base, making sure that they're properly capitalised, that they've got business systems and processes, that they've got appropriate resources on the ground to meet our business needs, and we're working in close collaboration with our distributors to make sure that that's in place. So that's kind of number 1 priority. Number 2 is about strengthening our premium and our core brands. So it's about making sure that Tusker is absolutely delicious every single time that somebody pops a cap, that the liquid is delicious, making sure that the brand delivery is in great shape, and making sure that the commercial activities and the marketing support are the ones which make sure that consumers are delighted to choose that brand and others in that sector. So strengthening our premium core is a key priority for me. And then the third area would be innovation. We kind of talked about that as well, we had a wave of innovation in F14. F15 was about consolidating those innovations, making sure that they get embedded into the market. F16 is about the next wave of innovations, and I classify innovations into 3 different buckets. So I've got brand new to world brands, I've got brand extensions, and then I've got brand renovation, so updating of brands. And I kind of think about our innovation agenda into those 3 buckets. And examples in those 3 buckets would be Origin, would be a new to world brand in East Africa.
So people didn't know that was made in West Africa.
It was first launched in West Africa, been a tremendous success in Nigeria, now a very big success in Ghana.
And what's it all about? It's taking indigenous flavours?
Yeah, so it's about African flavours in an alcoholic beverage, and we've been testing Origin in Western Kenya. Been going down very well, and we're looking to extend it into more outlets. It's a spirit-based product.
And is it a mainstream spirit, or it's a mainstream drink, right? I mean,
it's mainstream, lower mainstream. Yeah.
Okay.
Yeah. So that would be a new to world brand.
Yes.
A range extension would be like in Tanzania we've got Serengeti Lager.
Yes.
We've extended into Serengeti Platinum. Of course, we've got in Kenya, we've got Tusker and Tusker Light and Tusker Malt. And actually, Tusker Light is a great example of a renovation.
Yes.
Also Guinness, where we've updated the packaging.
What have you done with the packaging?
Well, Guinness a couple of years ago, we modernised the packaging and we foiled the neck. Consumers responded really well to that. Tusker Light, we've modernised the packaging of Tusker Light in the last 6 months, and again, consumers have responded really well to it. Here's a little bit of an exclusive for you.
Thank you.
We're just about to relaunch our Bell brand in Uganda.
Yes.
And I'm really excited about what we're going to do on Bell in Uganda. You also asked about Uganda Waraji.
Yes.
Uganda Waraji is a gin sold in Uganda and also in other countries. Very successful in South Sudan and in Rwanda. 50th anniversary of Uganda Waraji this year.
Wow.
And we've got a whole raft
People
of
might not know the longevity of your company, right? Yeah. I mean, we're talking about nearly 100 years.
Yeah, 93 years we've been in East Africa now. Yeah,
that's
93
incredible.
Years. So Uganda Waraji 50th anniversary, full program of activities, including launching some variants. So we've got coffee flavour and we've got coconut flavour going into the market now, actually.
So a lot of work's been going on, then. You're
Huge
seeing
amount.
that now.
Huge.
Right?
Look, and sometimes, Ali Khan, that sometimes business is a little bit about, it's like a duck gliding across the water.
There's a lot going underneath the water.
Underneath the surface, there's a load of activity that you don't necessarily see. And
Yes.
yeah, EABL is just like that. You probably see 2 or 3% of what we're actually doing, and some of the stuff that we do will emerge, at some point in the future, and some of the stuff you'll never realise that we've been doing it. But it's for good reasons.
No, excellent. Charles, can I just route back to the numbers quickly, if I may?
Go for it.
Dividend, you paid how much?
Yeah, so our proposed dividend to be ratified by the shareholders at the AGM, of course, is going to be a final dividend of 6 shillings. Last year, the final dividend was 4.
Yes.
So it's a 50% increase in final dividend. But we pay an interim as well.
Yes.
So when I add the interim to the final, our total dividend payment is going to go up by 36% this year.
That's pretty chunky in this environment.
If the shareholders approve it, of course.
Well done.
I'm guessing they will.
I'm sure they will.
Yeah.
Okay, so a dividend uptick. Now, you did a lot of activity in the last 12 months. You sold off the glass.
Yeah.
Can you talk us through the balance sheet work that you did? Because I think some people might have missed that.
Yeah, so look, we got ourselves into a place where our balance sheet was a bit misshapen, really. We had too much debt. Too much of that debt was of the wrong profile. And we were kind of a bit stressed, really. So we've been looking to kind of de-stress the balance sheet and reshape our debt profile. So during the last 12 months, we've launched a medium-term note program here in Nairobi, which was oversubscribed. We've got a facility for 11 billion shillings, but we've only taken up 5 billion of that, and the 5 billion was sold, I think, in 3 or 4 days. It was very
sold out real quick.
I think you forecasted it would be, right?
No, you're a blue chip brand.
Yeah. So we've now got a slug of our debt in medium term. We had quite a lot of intercompany debt with the Diageo parent company.
You had about 19 billion at one point.
Yeah, a little bit more than that, actually.
And is that still where it is, or has you?
No, we've paid down 2.8 billion in the last few months, and obviously, as we've been able to achieve the medium-term note program. We've also been able to kind of come out of some of the short-term debt that we had. Interesting though, here short-term debt is usually at better rates than at medium and long-term rates.
Yeah.
So we've got now, I think, an appropriate balance of short, medium and long-term debt. And also we're rebalancing our debt profile to be less about intercompany.
Okay.
So I think that we'll continue to pay down the intercompany over the next couple of years, so that I don't think we'll ever get rid of it, because it's very helpful for us to have.
Absolutely, and a strong pillar of support for
absolutely,
Diageo,
absolutely.
Right?
So but it'll come down a little bit. So it's probably gravitate towards being about 50% of our total debt profile, I think, is where we're going to get to.
And in case people don't know, a lot of this was to do with the acquisitions that you made.
Yeah, so a few years ago, Ali Khan, we were sitting on cash and we didn't have enough debt.
Yes.
And
I think a lot of shareholders got used to that sort of configuration of the business.
Yeah, but it's not the right way to kind of run the balance sheet. So we've restructured that. On the glass business, we haven't actually sold it yet. So the work that we've done this year has been out with the work on the glass business. We were hoping to complete the transaction in the last financial year, but we didn't get all of the regulatory approval, including the Competition Authority in Kenya approval, in time to be able to complete the transaction by the financial year end. And we're now expecting that to be complete for the end of August. So the impact of that will come into our next financial year numbers.
Charles, we've been in a very volatile environment for currencies. If you look at what's been going on, Uganda shilling.
That was a deep sigh, by the way.
I know. That's why. And Uganda shilling at one point down 30% year to date. Tanzanian shilling. I mean, the Kenyan shilling, although down 12%, it's not being too bad when you consider. Most of the companies that I'm speaking to have taken hits on this because they didn't factor it in. How has it affected your business?
Yeah, so it hit us to about the tune of 1 billion shillings, actually.
It did.
Yeah,
Is that because
900 and something? All of it came in the last 5 months of the financial year, and most of it came in the last 3 months of the financial year. And what we saw was, as you've just described, actually, we saw a weakening of all of the shilling currencies across the region, including Tanzanian and Ugandan shillings weakening further than Kenyan.
Yes.
So, we report in Kenyan shillings, and a proportion of our revenue, 39% of our revenue, is achieved outside of Kenya, right?
So it was a 39%.
Well, not exactly, because 18% is Ugandan and 11% is Tanzanian. So 29% is in those two currencies.
South Sudan is even more extreme.
Yeah, so South Sudan is, the official rate hasn't changed, but the black market rate has declined very, very significantly. So we have seen some negative impact. It's built into our numbers, about 900 and something million. We were disappointed to see that weakening. That said, Ali Khan, our exposure to decline of the East African currencies versus US dollar, euro and sterling has reduced over the last few years because we've implemented a strategy towards local sourcing. So now something in the mid-70s of all of our sourcing is done locally. 80-something% of all of our local raw materials, our cereals, are bought locally, whereas before they weren't.
Is that right?
And that's reduced our exposure to the international currencies in a way which was helpful. So it would have been a lot worse if we hadn't have implemented those moves. Going forward, I think the currency environment is going to continue to be strained, and we're going to take some actions to mitigate the impact of that and to protect ourselves from the worst of it. Those actions will include hedging currencies as appropriate. They will include making sure that our supply operations are, wherever possible, servicing their local market. So, for instance, at the moment, our brewery in Uganda serves the Ugandan market for some, but not all of our brands. For instance, Guinness is made here brewed here in Kenya and shipped. So we might be reconfiguring our route to market a little bit, or our supply chain a little bit, to offset some of the impacts.
Charles, I remember last time, you were speaking about local sourcing, and you had this position with Senator where I think you were sourcing. What were you sourcing from the local farmers?
Sorghum.
Sorghum.
Yeah, we had 13,000 tons of
sorghum.
Excess sorghum at one point. I think I offered to sell it.
No, you did. I did.
Yeah.
I should have bought it and then sold it back to you now.
You should. But you wouldn't. There's a missed opportunity.
See, I'm getting too slow.
Probably it wasn't duck egg blue. Yeah. So
Charles is having a laugh about my car, which he calls duck egg blue. Charles, local sourcing, great in theory. Has it worked for you? Because if you look back at that event, was that an outlier event, and it's otherwise been all smooth sailing, or,
Yeah, look, I think it really works for us on a number of different fronts, Ali Khan. So, from a perspective of mitigating currency risk, it works for us. From
which you probably hadn't thought about then, right? Or had you?
It was a factor. So we had expected a weakening of the currencies.
Yeah, you had?
And it was from kind of conversations with commentators, including yourself, when you look at current account deficits, you look at government spending, you look at the influx of cash from quantitative easing, and the medium and long term impacts of everything that was going on. It felt like there was a problem being stored up, and a correction was going to happen, right? So we had thought about it. It wasn't a primary driver. Another driver, though, was that whilst what we found was that there was a lower price somewhere in the world, but part of the reason for that was because capacity hadn't been built up and productivity hadn't been built up locally. Part of the reason that hadn't been built up was because companies like us were going to China or to Western Europe or sourcing from overseas, and we weren't giving local companies the opportunity to build a business base. And we looked at it and we said, well, hold on, if we support the local businesses, they will become more productive, they will become more effective, more efficient in the marketplace, and over time, as competitive as producers from further afield. And that is working for us. So, we're seeing that our packaging material suppliers are getting much better. We're seeing, as a result of our commitment to local sourcing, can manufacturing is coming into East Africa, and it wasn't before, right? So by being committed to the region, as a relatively big player here, those small and medium-sized companies and international players are coming in.
Yeah.
So we see that benefit, and we don't see the immediate financial benefit, but over a medium and long term, that benefit will come. Our commitment to agriculture in East Africa, to sourcing, our barley, malting it here, our other cereals, including sorghum. You build the capacity of the market. You work with farmers to improve farming techniques, to improve yields per acre, and so that they can get competitive with Western Europe. I'm really proud of the work that we've been doing because it pumps the local economy. It gives people livelihoods. Now, that also helps us because a more vibrant economy, we're going to benefit because of our, the consumer goods that we produce will be consumed by the people who are earning money. So it's a virtuous circle of growth for us. And also it helps with our stakeholder relationships as well. So for instance, on Senator, we were able to kind of say to our stakeholders, look, Senator is locally produced with local raw materials, and by supporting Senator, you're supporting the local economy, you're looking for farming communities and individuals, and so it helps with stakeholders.
Was that also a leverage point for the government when you had those?
It was one of the things that we said, right? And we're a company that prides ourselves on trying to always do the right thing, and an example of that would be honouring our commitments on sorghum. I think I said to you, we had contracts on sorghum far in excess of what we needed.
Yes.
We honoured them, and we took that pain because we want to do the right thing, and sometimes you do the right things and good things happen, right? And I think that part of the integrity that we showed as a business was one of the reasons that we're now in the position that we're in.
And where is Senator now? I mean,
Yeah, so Senator, the change in excise tax was applied from the 1st of July, or start of July, and we've lowered our pricing to distributors, and they've lowered their pricing to retailers. So the retail price has moved from 30 shillings per mug to 25 shillings per mug. Overnight, volumes doubled.
Is that right?
Overnight. It is such a price-sensitive sector.
That's extraordinary.
Yeah, so...
but what happened to all those guys you had out there who shut down? How did you get the distribution platform back?
So, over the next 2 years, the retail will come back. So at the moment, we're selling Senator through about 8,000 outlets. Before, it was being sold through 12,000 outlets. But the distributors were still in place, and the 8,000 core were still there. The 8,000 outlets, their volumes doubled overnight, and more in some cases, like tripled overnight.
That's incredible.
Yeah, because consumers are so price sensitive in that sector, Alicam.
What was the price difference that happened to make that triple?
It went from 30 per mug to 25 per mug.
5 shilling difference.
5 shillings.
That's remarkable.
Isn't it incredible? And you go, well, how does that work? But the reverse was true, right?
Yes.
So when it went from 25 to 30, volumes dropped by 80%. So
very binary, that, right?
Oh yeah, it's incredible. Either on or off. So consumers had traded out of Senator into illicit alcohol. They traded out of Senator into spirits at very low prices. They've come back. They came back, and at its peak, Senator was selling over 2 million hectolitres a year. It'll take another couple of years to get back to that level, but The thing for me about the Senator story, Ali Khan,
what were the lessons there? Because
look, the lesson is that
I thought you were very patient.
So I have been accused of not being patient enough and not being gentle enough in the commentary. But look, I think incredibly price sensitive segment, right? Obviously, being disciplined in terms of making sure that it was only available in the right segment. It wasn't generally available. Making sure that our stakeholder understood the practices that we were bringing to the market and that we were being responsible with that product so that it was being sold in a very targeted way to create a choice for consumers who would otherwise have to drink Changat or Busa. That's why Senator was created. And two more things, right? So one thing is the incredible wisdom of Kenyan government to create that sector in the first place. You look at it and you think that was an extraordinarily wise decision to work in partnership with a business like ourselves to create a choice for consumers to get out of the illicit sector into the formal sector for the health of Kenyans, but also for the development of Kenya as well, to get the grey and the informal economy formalised, right? So, I think the incredible wisdom. The second thing is, I was told recently that Senator is a Harvard Business School case study.
Is it? Wow.
Now, I haven't seen it myself, but isn't that incredible?
That's fantastic.
Isn't that incredible? Yeah.
Charles, I know it's your birthday coming up, and I believe you're going to be sharing it and enjoying it in Tanzania. Is that right?
Kind of, yeah.
Will you tell us what's happening in Tanzania? Because it's been certainly popping over the radar.
Okay, so kind of most importantly, I suppose it's the 11th anniversary of my 39th birthday.
Which is a big one.
Which is 39 is a big birthday.
And of course, for that event, I noticed you've shed a stone.
So I'm going to do a parachute jump, Ali Khan.
Oh, goodness.
Getting ready for it.
How high are you going to jump from?
18,000 feet, including a 90-second free fall.
Oh my word!
So that's
are you going to have a GoPro camera on yourself?
You better get
that. You've got to get that.
Yeah. So if I don't come back, I'm sure. No. Anyway, look. On Monday, I'm going to Tanzania to represent the business in a conversation with the FCC over in Tanzania about SBL and EABL's ownership of SBL. So I've had to delay my going back to the UK.
Yes.
Yeah. No, the parachute jumps on I think the 11th of August.
Last question, Charles. Yeah. Charles, you came here from Asia.
Yeah.
A lot of debate. I think there was an article by Nestle speaking about the middle class not growing at the same speed that they'd seen in Asia, which then subsequently was rebutted. Yeah. You've been describing, you look at these numbers, a lot of premiumization, you're talking about the middle class. Yeah. What is happening here, and what did you see happen there, and what can we understand from it?
Yeah, so look, lots and lots of things. I could talk to you for a long time about this, but I think that if you want to see the future of Africa, have a look at what's happened in Asia over the last 10, 15, 20 years. And I say that with the deepest respect for Africa. And I think, when I look at if I remember what happened in Asia, what I saw was urbanization. I saw migration from a rural environment to an urban environment. I saw infrastructural development. I saw roads being built. I saw, rail networks being built. I saw communications networks, fiber optics being built. I saw universities being built, schools being built, and hospitals being built. That infrastructural development. I saw enfranchisement of women. I saw an emerging middle class coming out of all of those things, because all of those things are to the benefit of the local economy. And And I went to Asia, I don't know, what was it, about 15 years ago now. And while I was there, I saw highways being built. I saw, China built 1,000 miles of railways or whatever it was. And the economic boost that they used to actually call it pump priming of the economies, right? That brought into the consumer sector, that brought into the broader economy. That is happening here. I've been in Nairobi or East Africa for 2.5 years.
Wow.
And
it's gone quickly.
We look out the window and you count the number of construction trains and what have you. You look at the Thika superhighway that I drive down every morning, and you look at the railway,
that's now opened up next to you.
the Garden City Mall, which has opened up. You look at the standard gauge railway. You look at you look at all of the development that's happened. I think we're a little bit, I don't think we quite understand the changes that are happening here in East Africa. Actually, I don't think we don't give full credit for it. And I look at East Africa and I think, this is a part of the world which is going to grow for at least the next 20 years. At least the next 20, probably the next 30. Solid growth, 3 to 5 to 7 to 9% GDP growth every single year. One of the things that needs to happen alongside that is ease of doing business needs to be improved.
Is this an issue?
Yes, I think it is.
Yes.
And I think for a company like mine, I think getting all of the permissions and licenses in place, getting all of it, including kind of transactions approved by authorities and stuff, all of that stuff, takes more time here than it does elsewhere. That detracts from the ease of doing business. The graft and corruption, the way that some initiatives which are well intended, but the implementation is suboptimal, and we were collateral damage in a well-intended initiative on illicit alcohol.
Yes.
All of those things need to get better, and they will. They will. I'm highly confident in the administration here in Kenya and across the region. We've got elections coming. We've got a drive to become competitive on the global stage, and I kind of say to my team, East Africa rising, and
yes.
Africa is rising, East Africa is rising, and EABL
is rising with it.
Is rising with it, and we've made investments into the capacity of our production facilities. I've got a supply master plan that looks 20 years out, and we look at our brewery network, we look at our production facilities, and we're making sure that we're set up to be able to serve consumers here in East Africa into the future. And I think the prospects for East Africa are very good, and we want to be a big part of it. 93 years here. Yeah. We won't be talking in 93 years' time, but hopefully